Welcome to the Dividend Talk podcast, episode 60. European earnings showing recovery signs. What's up, guys? Welcome back to another episode of Dividend Talk. European DJ and I will discuss with you today the most important news of the week, some earnings from popular European dividend stocks like BAYN and Novo Nordisk. We will answer some of your questions and we'll also provide you with our stock pick of the week. If you're new to the podcast, then don't forget to like us and all your favorite podcast channels. But hey, let's get started. See you on the inside. Good evening, European DJ. How are you today?
Hey, EMF. Well, really good. I mean, another show, another earnings. It was really like a great week this week to see all these earnings coming in. And of course, last week was really heavy, but this week there were quite some nice European companies reporting earnings. At the same time, August started. The summer is nice. It was a little bit raining a lot here, so you brought the weather over to Eastern Europe again, I think.
Yes.
So, but other than that's really good. How about yourself?
Yes, it's same here. Really busy week last week. I was a little bit tired going into this week, I have to say. And Monday I took a complete break from everything. I could not read anymore. But looking forward to some of these companies, these European companies. A lot of them are in both of our portfolio, so it'll be interesting to hear our takes on. Hey, but before that, let's talk about some of the news of the week. Lots and lots of stuff about COVID. I know we're sick of hearing about it, but now we have some companies who will give you the boot if you're not vaccinated. What do you think about that?
I think it's really good. I mean, if your risk is, especially in kind of a public service, or like in this case, I think we're talking about United Airlines that mentioned 65,000 of their employees need to be vaccinated. If not, you're fired effectively. So I think it's good because you don't want to be in an airplane with unvaccinated stewardesses, right? The service people, in my opinion, should be vaccinated, even no matter your opinion, whether you're supported to vaccines or not. I find in such public figures, public places, people need to be vaccinated because you don't want to be the ones that are spreading the viruses and making others sick. And we know that at least vaccines reduce the chance of spreading the virus. So for me, it's good. It's a bit harsh, of course. And I think people that really find their freedom in such in their decisions to take vaccines is really important. They might have a really tough dealing with this, but for me, it's a no-brainer that people should get vaccinated. So
I don't agree at all. Honestly, I think it's a breach of, as you said, freedom. You're creating this dangerous two-tier society. And I mean, if you're vaccinated, why do you care if the person beside you is vaccinated or not? What difference does it make? Like once you're vaccinated, you can still get COVID. So, I mean, it's
yeah, you can
everybody's
still spread it. So
exactly. So you can spread it whether you're vaccinated or unvaccinated. The only difference is vaccinated people will get milder symptoms, and even at that, there's not always
yeah,
the
but
case.
you also reduce the amount of spread that you can do. And I think if we want to stop this virus and stop the pandemic, it's a no-brainer for me that vaccines help. And I think if you're working in an airplane, I think you should just take these measures and just get vaccinated.
As I said, I just don't think once if you're vaccinated, like I don't care how anyone stands on vaccines. That's everyone has their own personal preference, but I don't think you should be fired from a job because you don't want to put something in your body maybe you're not comfortable with. I think it's setting a dangerous precedent, and it'll start with this vaccine. What else will it end up with? We can see that vaccines from when the swine flu was around, there's cases coming up, I know, in Ireland and such, that there's huge trials ongoing over trials that were not completed, or stuff that I found. So I can completely understand why people would be reluctant to put it in their body. And I'm vaccinated, just so as everyone know. I'm not coming from this from an anti-vax perspective, but I feel like it's people's freedoms and rights are being completely abused here.
I think totally different here. If I'm a business owner and my customers don't want to step into a plane because they hear that my employees are not vaccinated, I'm just losing a customer base. And I think here that I've got an economic incentive here, my employees as well. So I expect from my employees, therefore, to make sure that we as a company can earn the revenue we need.
But
So
how do the customers know who's vaccinated or who's not? That's not public knowledge. Nobody knows. Like, you can't search a record and say this person's like, nobody knows who's
but
vaccinated.
but this is yeah, we can and indeed we can go really long onto this, I guess.
Yeah, yeah. It's
But look, for me as a person, I want the company to provide me guarantees that their employees are vaccinated, and an employer can look this up because they just can ask from the employee and then and then make a statement. Yes, if you fly with us, you're flying in a safe condition, or safest condition we can provide to you. And I think that's what this is all about. And I understand that if I would be an entrepreneur having my own business, and let's say I'm installing security systems, and my people are not allowed into a house because they don't want unvaccinated people into their house, our
Mhm.
clients, then my employee has one option, and that's get vaccinated, or I cannot earn money with that person.
But you see, it's interesting. The companies, okay, we have United Airlines, CNN. There's tech giants such as Facebook, Google, Microsoft talking about doing this as well. They have huge presences in Ireland. They're not talking about introducing it in Ireland because it will be against our constitution. It's against any freedom. It's only happening in America at the moment,
Yeah.
and I can't see it flying too easily over in Europe because it's like it's I just really feel it's dangerous. I think everyone should have the right to take a vaccine or not, and you should not be penalized because you have that. But hey, that's that's how we roll in this. We have our own opinions, and we'll move on. Let's talk about Bernard Arnault. He's the richest man in the world, I believe.
Yeah, this is really interesting, right? And I think many people probably caught it. But what I just find so interesting is that selling some handbags can still make you the richest person in the world. Yeah, compared to someone, having owning the Western world with e-commerce, shooting rockets into space. Handbags, selling handbags is still profitable.
It's crazy. And here's a fun fact you never knew before. But in my entrepreneurial days, I bought a load of handbags to try and sell at one point, and realized I really had no clue about handbags. And my wife had to do all the heavy lifting afterwards. But I mean, I admire him. He's European. He's the richest man in the world. How long he'll stay there, who knows? But I mean, fair play to him.
Yeah. Oh, I mean, it's interesting to hear that you were flipping as a side hustle. I didn't know that.
Yeah, I've done also. So I went back to college. I gave up a full-time job to go back to college. I had two kids. I had a mortgage, so I was worried at the time. And this was just before we started our coffee business. So I tried a couple of things, and then went into the coffee business, and it's all good. But
Nice.
we try flipping handbags, and I should actually send you on some pictures of of some of the ones I bought. Quite
Yeah, that would
funny.
be great. Okay, cool. So let's then start looking into some of the earnings. And what I really liked is that you picked Bayer to talk about, because I'm quite opinionated about Bayer. I will do some more due diligence this weekend actually about it, as a heads up. But yeah, I'm really curious to what you thought about their earnings and how you look at it, the whole situation.
So I was inspired to look at these when I read one of your tweets earlier this week. I see that you are trying to get the poor CEO out of his hot seat, I believe. And I read your tweet, and immediately felt, okay, something bad must have happened. Opened up the financial highlights, and then I was like, What's European DJ talking about? I can't see a whole lot too negative, or at least something new that we didn't know about. The group sales increased nearly 13%, which which we expect. Last year they were heavily impacted, um, particularly in the pharmaceutical and the crop science because of COVID. So we knew that they were going to increase. So 13% was a decent increase. Some of it is currency headwinds, but a lot of it is from sales increases. Both pharmaceutical and crop science had very good sales increases. So it's pretty much what we expected. The only negative, and the one thing that you can see constantly throughout the whole report, is they are being hampered by litigation, and that is the main theme. It's litigation, and they try and dress it up in certain ways. So they report their EBITDA, or their EBIT, without special. I can't remember the word. Without special events or something. They put a spin on it.
Correct.
So
Yeah.
so they report it without that, but you can't just ignore that because it's there, and they then introduce that at the bottom of the report. One thing that was quite concerning for me is that they can't cover their dividend. So they've increased their debt by, I think it was nearly a billion or something to cover the dividend. That is being hampered by litigation. So litigation is costing them 3 billion. They have 3.5 billion, and it's really hurting them at the moment. Everything else is positive, but it's this constant litigation that's lingering over them. And it was a question by Alan, actually. He asked us, what would it take? I would love to hear, what does it take for you to invest in Bayern again? And for
So I
me,
still own Bayer,
yeah,
right? I still own 100 shares. So look, why I'm so pissed off, and half of, probably 80% of all the other investors, is because look at it, and we have the picture in front of us. Litigation legal risks last year, Q2 2020,
yeah,
12 billion. Yeah. And we were all thinking kind of, okay, this is it, right? That it was communicated like there was really still like a small backdoor last year that
yeah,
was communicated. But this backdoor was, it was communicated more in a sense like, we cannot give 100% guarantees. You never know. Bam, 3.3 billion on top of it in this quarter again. That's huge, right? That's really huge. And now the communication is even worse. So now everyone starts wondering, okay, will we see 20 billion soon? And remember, they bought Monsanto for 60 billion or something like that.
yeah,
So plus, and that was already heavily in debt for this acquisition. Then plus now another 13 billion in litigations, probably also over time decreasing sales if they because they want to pull it out, I believe, in the person in the, how is it, in the consumer business, but keep it in the industrial.
yeah,
So, and what it just shows is the incompetence of management. So if you ask me what needs to be for me investable, I still need to look into and do my due diligence again with these latest numbers. But let's say before these charges, additional charges, you're getting effectively, if you look at the adjusted EPS and indeed take the litigation out, you're getting the company for, what is it, a 6 times earnings?
yeah.
That's what we're
Um,
talking about. 6 times earnings, excluding the litigations. So then the question is like, how much debt can this company still carry before it really starts putting their bank obligations into questions and their credit ratings, right? That's what we're talking here about. And that's a difficult one about this. So if you bet on a turnaround story, this if they get the litigation settled, this might become a 3x
a hun-
in no times.
a hundred
Yeah.
percent, yeah, 100%. And that's what it would take for me, is and I remember saying this, that when we believed the litigation was done and dusted, I bought shares, happily bought shares, and then it reared its head again. I don't blame management for rearing its head again. They had no control over this in the United States. It's something out of their immediate control. We know, look, they bought Monsanto, they made a bad decision, but they believed, and I truly believe that they thought it was done and dusted after they paid this 12 billion or whatever it was. Now that it's reared its head, that needs to go away before I invest. But as you said, this could be the play of the decade if you want to take a chance. Because once that goes, I mean, you look at their sales, they are still a growing business. The only thing that's hampering them is litigations at the minute.
Litigation. Yeah.
Yeah,
And I do blame management for this because I've been observing Bayer really from closely since I own Bayer from before Monsanto. And I never understood that they bought even Monsanto because the cultural fit between the company and Bayer and Monsanto was not there. Yeah, you're talking here about Monsanto, which was already hated before,
yeah,
really by many, many environmentalists. And then a gentleman company like Bayer passes by, yeah, with the culture. It was a misfit, heavily in debt. Yeah, so you could argue that they paid a lot for this, and although I would say it was not like they over that they paid a lot on top of what Monsanto was worth, but Monsanto just deserves a discount at the time already because everyone hated it for good reasons. So these litigations, okay, I never predicted that it would be this big. I think nobody like individual investors did. But what happened, I mean, is just a total failure of due diligence, total failure of this. And then yeah, you get into the American system where they are saying like, okay, the Environmental Protection Agency is not having any proof that this is giving you cancer, right? But then you have like juries that are saying like, well, we hate you, Monsanto. We find you. We find you guilty anyway. So there you go.
yeah,
And but then for me, like we have seen other companies being able to settle things. Look at Johnson and Johnson, how it's doing with their litigations. They are not the how I say it. They are no priests either, Johnson and Johnson, right? With the opioid crisis and such. But look at how they are dealing with it. Why is Johnson and Johnson now trading at 170 and not at 60? Tell me.
mm, yeah,
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 it's different management. They know how to deal with this, and for me, the CEO and the legal team are probably just incompetent. They need to talk to Johnson Johnson how they are doing this, and maybe hire their legal team. Could have saved them a few billions.
yeah.
Simple like that.
Could be a better legal team might be required. But there's one thing that is sticking out to me like a sore thumb, and that's the dividend is at risk. And if you just control F their report and type in dividend, there's 11 instances of the word, and you will see that equity decline because of dividend. Everything is
Yeah,
pointing towards this being cut, and I will not be surprised if we see 40-50% cut in this next year.
but the dividend got already cut last year, right?
Yeah, and it's going to
Went
be.
already, I think, from 280 to €2 or something like
Yeah,
that.
but I could see them having that again. Really, I really
Yeah,
can
yeah,
see
yeah.
that.
I think as well. So for me, this is to be clear to all the listeners. For me, this is not a dividend growth investment story. If you're looking for growing dividends, please stay away from this company now. It's too toxic, too hot. Stay away. That would be my recommendation.
Yeah,
On the other end, I'm also a little bit of a value investor, and 10% of my portfolio I put in either non-dividend paying stocks or value stocks, and that's where this is really appealing for me. But this bloody litigation. So for now, I'm just doing nothing. But maybe after some due diligence, I might, I don't know, buy a call option or something like that to speculate a long outstanding call option and fund it with a put option or something like that. I don't know yet, but that would be pure speculation for me at the moment.
yeah. I mean, they're trading almost at 2012 levels, so it's really, really getting close to extremely good value. That it's almost worth taking a chance to buy,
Yeah,
irrespective of litigation. But as you said, if they can get rid of that litigation, we could see these double in price nearly overnight, easily.
yeah, exactly.
Okay, I will look forward to your deeper analysis on this during the week or maybe next week.
Yeah. So let's talk about a little bit of a, a company that actually annoys me as well. It just annoys me because I don't own it, and this is Wolters Kluwer. people that are not familiar with Wolters Kluwer, it's I wrote a blog post about it, I think in March, 8 March.
Yep.
The company is mainly known for all these databases. So if you work in, for instance, in tax or in the legal industry, government, you know these kinds of big databases that you often look into for retrieving data, whether it's like statistics or more like laws, right? What are the laws in different countries and the regulation? Many times you use Wolters Kluwer for this, or Relex, the British competitor of theirs. So Wolters Kluwer is really big in here, and they operate therefore in health, tax and accounting, governance, risk and compliance, and legal and regulatory as business units. And when I wrote the article on the 8th of March, it was trading for 67 euro, and I had it fairly valued around 69 euro. You need to know that literally after that, it bumped to 95 euro. So for me, was I too greedy? Probably then, because this was clearly a high quality company at a fair price. And I was probably greedy and looking for a margin of safety here.
2 euro,
So
€2 margin of safety. We're talking
to
about
your
a fine margin here.
Yeah. So I think I wanted to buy it at 60 or something like that if it would hit 60. Anyway, if we then go now, and this is why it's so frustrating for me, revenue up 5%. Yeah, which is huge for such a company, right? 5%. Um, Adjusted operating profit up 14%. Yeah, 14%. I mean, these are huge numbers for a boring company, because it is a
Yeah.
boring company. I said earnings per share up 19% in constant currencies. And you need to know these companies, they have a high impact from the currencies, because Wolters Kluwer, I think, earns 60% of their sales from the United States. And I believe they said like any 1% currency change results in 2 cents of additional or minus or additional earnings per share. So this is a really big impact, right, on currency. Cash flow 476 million right now. But I did look a little bit into the cash flow, because 476 million, they said 50% up in constant currency. I must say they're playing a little bit with the numbers here, because it's again working capital movements.
Okay.
Without that, it wouldn't be so nice. So last year they had cash outflow because of working capital management. Now they kept cash in their pocket effectively. So this is a little bit playing with cash flow, playing with working capital really can boost up your free cash flow. So be aware of that. Don't take the headline numbers as such from this point of view. But what was really making me frustrated is that they announced a dividend per share of 54 cents, which is 40% of their prior total dividend year from last year, total dividend. But if you compare this to last year, then they paid out a 47% interim dividend. A 15% dividend hike is what we're talking about probably. So I didn't model my analysis based on 15%, but on 7% or 8% growth. I don't remember correctly, but it's usually what I do with these kinds of companies.
Yeah.
On top of that, the 300 million buyback program, which is probably again a 1.5% share reduction. This company has been reducing shares almost by 2% in the last 5 years, every year, which is really good. And they're doing this out of free cash flow. Yeah, so free cash flow plus dividends plus share buyback. It's not hitting them in a debt level or something like that. So this is just a really rock solid first half year and a second quarter. I'm really amazed about the power of what they are doing here. I know they're moving more into the cloud and such, but did you ever expect these kinds of databases to be so, I said, to be so profitable on a continuous basis? It's really amazing for me, and I really regret that I didn't buy them in the high 60s. This is one of those companies I just should have bought hand over fist, a lot of it.
Yeah. Yeah. The performance over the last year has been nothing short of incredible. But at the moment, they're trading at 35 times their earnings. I mean, that's too high for me. I could
Yeah,
not.
now it's too
I
high.
could. Yeah,
Yeah,
yeah.
yeah. But at 60, you would have gotten it at what is it? 22 times earnings with these growth numbers.
Yeah.
Yeah,
So you missed the boat on that one, but some pretty good numbers, and the 15% dividend hike. That's pretty impressive for a company like that. You have to say.
yeah. So that's Wolters Kluwer for me. I wrote a post about it in March. I will put it in the I said in the description of the podcast if people are interested. But yeah, so from buyer frustrated, Wolters Kluwer frustrated. So please lighten me a little bit up on Vonovia, please. I don't
But
own that one either, so I hope these are bad results.
yeah, Vonovia have knocked it out of the park as usual. They're
Fucking
just
hell.
they're just reliable. We spoke in the dividend day chat, I remember, and we were all buying Vonovia, and you refused to buy them. But I just think they are a solid company. They're just always producing results. You just look at their history. It's just really strong company, strong balance sheet. But if we look at their revenue and remember at the moment there is lots of talk in Germany. I know there's lots of fear with imposing stricter legislation on rents and so on and so forth. So there's a lot of fear around this company, which is why they were trading a little bit below value for a short period. But they increased year on year revenue 10%, which is pretty good. Adjusted EBITDA was up 8%. Group funds from operations was up 13%. They've still managed to keep their loan to value around 45%. So that's their target. They target between 40 and 45. So it's still doing quite good there. And each group is performing pretty strongly. I've noticed they are starting to outreach into the Netherlands and France a little bit as well. So they're looking at potential future growth. So I believe they're aware of what's happening in Germany, and they're trying to maybe get strongholds in other countries, which I quite like. So they're going to grow exponentially, I believe, if they can to get into these. But it's a company that I really like. They're doing lots of really good stuff and have great management. I think they're managing this company very well. They know the risks. They know how to maneuver these risks, and they're performing really good results. But just I'm showing you a slide. Looking at the slide there, the performance since 2013 in funds from operations, dividends, and their adjusted NAV, it's just an upper trajectory. So I still think they're fairly valued at the moment, and I might just keep adding some more because I just really like what they are doing.
Yeah, I mean, me too. Now I know more about the company, so maybe that's also the reason why I didn't buy at the time. And I wanted to share this also to the listeners because I don't buy a company based on when others talk about it.
Yeah,
And what I maybe should have spotted better if 10 people are talking about it, like maybe there's really something there that I should look into. But I was with my head in other companies at the time, and I can only analyze so much as I can per the time available. So I put it on my to-do list, like I do often when people give me stock recommendations, and I've
yeah,
got like still 15 to go through. So that's just why I didn't invest in it. And now that I really did my own due diligence, and also your post on your blog was an inspiration for that, I'm convinced of it. But now, yeah, I just want to be a bit more greedy on this. I don't need to buy it. I don't need to own it now. So I can wait for the better prices, or maybe it grows with its funds from operations into it, that it becomes valuable for me.
yeah.
Because now, for instance, I bought some Allianz this week when after the share price drop, and so I spent most of my money for this month already, right? So I can wait another month again for Vonovia to come down a little bit, or not, but then probably I'll find something else again.
Yeah, I think in a month from now it's not going to grow astronomically, but I mean between them and Castellum, I think you've got two really strong, essentially REITs
Yeah.
in Europe that are often overlooked. So I would keep an eye on them.
Yeah, and that was also a question from Dividend Dane, like about real estate investment trust and for instance, my portfolio, because I earn realty income and Omega Healthcare at the moment.
Yeah,
And actually, Castellum and Vonovia are the other two I want to own. But again, I find them a little bit too expensive at the moment, specifically Castellum. It keeps on knocking out of the park. I just don't want to pay the price for it, and the yield is too low for me.
Yeah.
But those are the two companies that on the dip I will buy. So Dividend, then in that case I will have four real estate investment trusts in my portfolio, and that's enough for me. Out of 40 stocks is 10% in holdings. It's enough for me. So I hope to maybe this year to get a chance to nibble into one of those two, and otherwise, well, I'm sure next year or the year after will come good opportunities again.
Yeah, IIPR is one company that has been on my radar. Wolf of Harcourt Street has been on at me every single time about this company. I, to be fair, they had really good results this week. I only looked at the headlines and from what people tweeted. I didn't look directly at them, but they seem to be just knocking it out of the park as well. Again, they always seem so expensive for me. But if they were to dip in price, they would be another one that would be on my radar. But other than that, I would still like to add more realty income, but the Gyro can't sort their shit out. So until we get more information on that, I'm stuck on that front. So it's going to be Vonovia for the short term, maybe Castellum, and IIPR.
Yeah, and now that you remind me about it, I also own Digital Realty Trust on the Giro, by the way, is a real estate investment trust. But yeah, I bought some of that as well at $150. It's expensive, but still a good yield there, and their growth numbers are really good, and it's a play on the data centers, right? Because they deliver a lot for Facebook, Google as their main customers, still in expansion mode. And I got it at the time, I think, for a 3.5 or 3.6% yield still.
Okay.
So that was then also more from an income point of view, looking more at the yield than at the valuation at the time.
Yeah, because I remember looking at them before. Maybe it was Dividend that mentioned them, and they looked expensive. All REITs seem to look expensive at the moment, but
Yeah,
uh,
true.
I remember they particularly did. But I believe that's a really good one. I mean, data centers are not going away anytime soon.
Yeah.
So it's a
That was my thinking as
yeah,
well, and that was an entry position, so like really small, but just to get it into my in my portfolio, so that I remind myself about it and that I see when it dips effectively.
yeah, buy the dip.
Good. Okay, quickly then, there was one other company that I looked into, was Novo Nordisk, and again a company that I was too greedy on. So I don't own it. I should have. I wanted to have it in the low 400s, 400, and I think it was trading at the time at 430, 440. But what I wanted to just highlight here, I will not go through all here, but they grew their sales by 5%, or yeah, by 5%, which is huge again. But what really stood out to me is that one of their drugs are their, how is it, which is called Ozempic, which is against diabetes type 2, and they call it weight balance, but we know it's just for people with a high BMI, let's say it like that. They grew their sales from 9.5 billion to 14 billion compared to last year, which is a 47% increase. And you need to know that it was already their best-selling drugs. So their best-selling drugs had a 47% increase. It's relatively young on the market. It's still getting approvals all around the world. And yeah, I just love Novo Nordisk as a company. I mean, it flew away. It's trading in the 600s now. But Novo Nordisk is really one of those high-flying pharma companies in European companies that I think we should be all proud on. Novo
Yeah,
Nordisk, what they are doing to fight diabetes is really incredible with their insulins and everything. And this new drugs, for instance, it allows you to take only once a week an injection. Yeah, and I remember some people from the past that had diabetes. They were all the time walking with a pack of needles in their pocket,
yeah,
and going to once a week injection is, I think, really a relief to many patients. And yeah, they're just really having a lot of momentum at the moment with these drugs, and it's really improving their sales a lot. This company is on fire, and the dividend growth is on fire. It's a Noble 30 member, and everyone who's holding into onto Novo Nordisk, I mean, congrats! You really picked out a European pharma unicorn here.
You know it. It's interesting you say that the sales of this drug that, as you eloquently put it, for people with high BMI, the sales have been driven in North America, which we know has an inherent problem of weight.
Overweight,
I
yeah,
mean, so it's a huge problem. It's not a secret in the United States, and you can see that this drug is perfect for that market, and you can see that in the results. So I'd expect that to do very well. I suppose anyone who's a shareholder of McDonald's and Novo Nordisk will probably get the best of both. People will be buying
yeah,
their McDonald's for lunch and taking these later on. But I mean, they're doing incredible stuff. And I have friends with diabetes, and it's not pretty. It's not nice. It can be quite scary at times. And what these guys do are simply incredible for that. So I I would love to own this company. They have a factory just around the corner for me. I don't, but they do some really good work. So no, fair play to them,
yeah.
and well done to them.
Cool. So these were 4 European earnings, I think, and that was so nice about this week, right? Compared to last week. Last week was also a lot of American, really like the high flying stocks, but these were some, for me, really interesting companies to look into, all with their own dynamics, right? Because we didn't even talk about Vonovia and the acquisition stuff there here, and yeah, I hope. I think next week maybe I need to check. Maybe Ahold or something like that will still report. So there might be still few nice European companies to look into. But yeah, let's start now with the how you said with the listeners' questions. And the first one is from Phil, and he's asking, "Please share your dreams with us. And which industry do you want to see the next disruption or the next game changer?"
Oh, that's a good question. Uh, I don't know. Not off the top of my head, I really don't know.
So I would really love to see in how you say it, in the oil and gas industry or the energy industry, that we really get a game changer there. Like really something that someone, I don't know, develops, figures out a clean energy that has really a lot of market potential. And I know those are lying already on the shelf actually. So I know that the market dynamics are really tough because you have high entry barriers, right? Because
Mm,
think about, if you come with a new energy source, you need to get a whole supply chain set up. You need to get a whole delivery, downstream delivery chain set up. You need to have, let's say, gas stations or something like that. But it would be my dream, and he's asking about a dream, not about reality. What would be my dream? That we would kill a lot of this, and that it would be invented and the patents would be owned by Shell. That would be my dream, because then I would benefit major as a shareholder from it.
I was expecting you to say something with banking, just to get rid of all bankers altogether. I know cryptocurrency is there to disrupt it,
Yeah.
but something that actually completely wipes
Wipes
away the
out
banks.
banks. Yeah,
Yeah,
that would also be my second dream. I would I could have a you could wake me up for both of those dreams in the night. Yeah.
very good. Okay, Zach Bradley has messaged us the question, and he said after breaking down Apple's financials, he sees that the stockholders' equity has been decreasing incrementally since 2018. What's the reason behind this decrease? He would like to invest in Apple, but he's a little bit worried about this equity
Mm.
decreasing all the time.
So, it's really simple. This is what we call financially engineering, and or maybe not even financially engineering, because they are quite, yeah, it is financially engineering. But what they are doing is just they are buying back massive amounts of shares. And from a bookkeeping point of view, an accounting point of view, when you reduce your share count, you need to do that against your stock, how is it, shareholder equity, because there's something in there. You have retained earnings and such, and treasury shares often. And I don't remember exactly which post it is there in the accounting, but one of those two you need to reduce, because effectively you're pulling back shares in onto your balance sheet. Yeah, but it's a negative one, and by buying it back, and that's why it's decreasing. which therefore, when people look at it, they see the debt to equity becoming worse. Yeah, specifically, yeah, because if you have less equity but your debt stays the same, or worst case, like Starbucks, it becomes even more. It screws up the how I said, the balance sheet metrics. So that's really what it is about. And if you ask me about overvalued, I definitely think it's overvalued. It doesn't belong there at such a multiple. So I own quite some Apple, to be fair, but I bought them when they were trading at a 9 or a 10 PE. So
Yeah, but I mean, they're still knocking it out in the park, aren't they, with their results? And the iPhone 12 as well is performing
yeah,
really strong. And I don't know if you've seen this on Twitter, but the AirPods,
yeah,
if you were to make them their own business, it would be it would be worth more than a lot of the companies on the market at the
yeah.
moment, which is
And
incredible.
this is amazing that Apple can make such kind of a simple product, if you think about it, with many copycats, and get it, it's at such a price in the market, and many people are buying it. I mean, this is innovation at scale when you think about it,
Well,
right?
what they did is they created the problem and
Yes.
fixed it. So
And think,
they
yeah.
created it. They took away the feature on their phones where you can plug in normal headphones, and then they made a fix for it and charged you for it and made an absolute fortune. I mean, that's genius. I don't care.
Yeah, it
That's
is. It
genius.
is. This is for me, Apple. If people say that they are not innovating anymore, they're still doing it. I
Mm,
mean, you shouldn't look at invention, but at innovation here. They are a powerhouse. But it's more like, I think still that the price to earnings doesn't justify the growth rate behind it. So it's still too much for me.
yeah.
But we speak about this all the time. Just the markets are so hot at the moment, and Apple is there as well. And for me, it should drop by 50% almost before it's interesting for me again.
If I keep saying the market's going to crash, if I say it every week, I will be right once when it happens.
At least once, and then you will earn a dividend talk statue.
Okay, Centrino has asked us a question about his a potential strategy. So his idea is to keep reinvesting the dividends received, I presume in dividend stocks, but he also would like to invest in two ETFs, so a Vanguard S&P 500 ETF and a Vanguard All World ETF as well. And he's asked, do we think that these two strategies are compatible, or would you not run them in parallel? I mean, for me personally, I don't think there's nothing on not compatible with each other. It's personal choice. I think personally this is probably a good option if you're thinking about it and you want to get more exposure to companies. Um, uh, ETFs are, as we said before, are a great choice. So I have no problem with anyone, and I think a lot of people do. A lot of people do
Yeah.
have a similar approach to this. So they will have their ETFs. Maybe they don't have enough time as us, maybe to keep analyzing companies. So they have their ETFs and then invest in a few companies as well. So I mean, I think it's a perfectly good strategy.
I actually love ETFs, from this point of view, but I would, for instance, love to own the Vanguard Dividend Grow ETF. I would
Yep.
love to own it, but it needs to be 3% yield for me to start looking into an ETF, because I have the same kind of screening criteria for an ETF, and I want to see dividend growth. So he also asked about two particular ETFs. So here my answer is, Centrino, look up not the price chart from the last 5 years, but look up their dividend history from the last 5 years, because I did one time a post about it, and I don't think I analyzed these two of Vanguard. But please look at it, because not every ETF is actually showing you dividend growth. Although the name might say that they are a dividend grower, many of them, they don't grow dividends over time. They just have dividend growth companies in there. But if they are massively cutting dividends or something like that, because they use, for instance, in their ETF policy, only companies with more than 5 years of dividend growth, yeah, they've been massively cutting dividends in the I said during the pandemic. So then those companies didn't give you a growing dividend. And if that's important for you, just check that out, and that will answer your question whether they're worth it. And it's really like investing in stocks. Look at the dividend growth numbers, look at the yield on cost, and make a decision based on that. It's not much different from that point of view, I would say.
I had to quickly check my son's portfolio. I'm just doing it on my phone, and he has the all world ETF in his account, and that has returned him 33% since he started investing in them. So I mean,
Yeah.
it's very reasonable. I think he got it when it dipped back in March. He picked it out
Yeah.
himself. As I said, I don't invest in ETFs. That'll be a bit of a tax hell for me when that comes around in 8 years' time. But I mean, I think you can't go
Yeah.
wrong as an investor. I think you can't go wrong with an ETF like that.
Yeah. Super. Hey, and then the last one, Piotr, he is asking if you can choose one turnaround business, then which stock would you invest in?
Intel. I believe Intel are going to turn around, and that would be the one. It's already Walgreens was one as well, but
Yeah.
I'm already invested in them. I sold my shares in Intel, but they would be the one that I'd probably buy.
Yeah. I would, it sounds awkward, but because I still own them. But if we really talk purely about turnaround, I would probably invest in General Electric because Larry Culp, for me, is one of the best CEOs that I know. He did a great job with Danaher. He is doing a great job with cleaning up the mess at General Electric. So I will probably look at General Electric here. And
It's,
not as a dividend company, right?
yeah,
As a value play
yeah,
and a turnaround play.
yeah.
Yeah.
Okay, and that's the last question. Thanks to everyone for the questions. So I think this week the stock pick will go to me this week. So I have chosen a company that I've never looked at before, which is called Ingredion. And I know I put this into the chat the other day, and not too many people knew about them, or at least heard about them. But essentially, they are a multinational ingredient solutions company based in the United States. So they take components like wheat, fruits, vegetables, and make them into value-added solutions for lots of different companies in lots of different industries. So any industry, whether it's food related or beverage related, you might think that they have a little bit behind that. So they try and create value for these companies. They're in America, Asia, Europe. They're pretty much their main markets, South America as well. But they have a really, really, really good dividend history. The last 5 years has been a 6% dividend growth rate. They struggled a little bit last year, but you look at, I was analyzing them in terms of what happened in the last crisis, 2008, 2009. And a similar thing has happened pretty much this time in 2020, 2021. So whenever there's a crisis, supply chains lock up, and it can cause them problems, but they've always recovered really, really strongly. And that's what's after happening again. They've had really, really strong results this time around. So I believe that they are a good company to invest in because they are transitioning from their normal sweeteners into the likes of stevia. And we know that lots of people are a lot more health conscious. This is now accounted for 50% of their sales in North America and Europe, I think, which is huge, considering that they didn't have anything in this business before 2018 or 2019. So really strong results. They have a really strong balance sheet, low debt. It is increasing slightly. They did make an acquisition a couple of years ago. The payout ratio is always in around 40%. And what I do like about them is they have a really good R&D team, sort of similar to Roche. They do that's kind of their competitive advantage over the likes of McCormick's or AMD. They have a really strong R&D team that are always coming up with new solutions, and pushing that because it's a really competitive market. They're fairly priced at the moment. I wouldn't say they're overvalued, but they're certainly not undervalued either. So if you're looking for a better entry point, maybe wait. But definitely one to look at. I mean, everyone always needs these kind of foods, yeah, everyone. So I don't see them going out of business anytime soon, and they have really strong headwinds, in my opinion.
It's really interesting that you brought this one up because now that you tell this and about stevia, I got into contact with stevia as a product when I started my vegan diet.
Oh,
So
okay,
I'm using a vegan diet, and then if you want to bake cake or something like that, you need to have kind of a replacement. A stevia is the one they recommend, and
yeah,
it's bloody expensive.
yeah,
You don't need too much of it when you're baking or something like that. So I've got this stuff at home, and we use it. We use it a lot. and I think it's premium pricing, and it's actually the only product that you have. There's not really an alternative in the shops here. It's really stevia. So
Same over here, and I think it was a brilliant move from them, and the sales have been just booming
I can
since that
imagine
they come out.
because I see it around me, and specifically in the metropolitan areas, veganism is really booming. I see it in the restaurants popping up. I see it on the menu cards where it's now being identified everywhere. Even the products are listed in there because people are really conscious of this. Even at the local bakery here, they're writing down what they're putting it in since a while. So for me to have a play like that really triggers my attention. So I will really look into this one.
Cool. If I can inspire anyone to look into it, that's goal achieved, in my opinion.
So the ticker is INGR, right?
Yes, yeah, INGR, correct.
Cool. Thank you. So it means that we're at the end of the show again. I mean, it went so quick, and so much again to talk about. And I know we could have spoken about other companies still, like we didn't talk about Allianz or something like that. I'm
Yeah.
sure we could have done more than 2 hours today.
Oh, without a doubt. And like you said, even with Vonovia and companies, we didn't talk about acquisitions. We could have spoke about these companies a lot more. And I personally, as a European, I'm loving seeing European companies doing so well. They all seem to be coming out stronger. They're quality companies, aren't they? And we're starting to see quality rise to the top after the pandemic and stuff. So I'm really excited to see these companies doing so well, and hopefully it will continue. But as always, thanks to listeners for questions. Thanks to you for your time and your
Likewise.
insights, and hopefully we will see you all next week.